Welcome, crypto enthusiasts and policy wonks. Today, we're diving into a fascinating intersection, the world of XRP and the powerful legislative landscape of Washington, D.C. The future of XRP isn't just being shaped by technological innovation or market forces. It's increasingly being determined in the very halls of the United States Congress. For years, XRP has navigated a complex regulatory environment in the U.S., facing legal battles and an uncertain path forward. But now, with growing awareness and legislative efforts, the conversation is shifting. We'll explore the compelling economic case for XRP's integration into the U.S. financial system, the ongoing efforts to achieve regulatory clarity from agencies like the SEC and DOJ, and the specific legislative actions being taken by Congress. We'll also look at the surprising level of executive branch and public support that's emerging for XRP. So buckle up, because understanding XRP's journey through the U.S. political landscape is crucial for anyone interested in its future. The economic case for XRP in the U.S. Let's start with the economic argument for why XRP is gaining attention in Washington. A compelling proposal submitted to the SEC outlines XRP as a strategic financial asset for the U.S., capable of unlocking trillions in economic benefits. 1. This isn't just speculative, it's based on concrete financial insights. Consider the concept of nostro accounts. These are accounts banks hold in foreign currencies and other banks. Globally, these tie up an astonishing $27 trillion in capital, with the U.S. share alone accounting for $5 trillion. The proposal suggests that by utilizing XRP for cross-border transactions, approximately 30% of this capital, or $1.5 trillion, could be freed up from banking liquidity. This capital could then be reinvested or used more efficiently within the U.S. economy. Beyond capital release, there's the immense potential for annual transaction cost savings. The proposal estimates a staggering $7.5 billion in annual savings by reducing transaction fees, which currently burden international transfers. This efficiency gain directly benefits businesses and consumers engaged in global trade and remittances. Furthermore, the document highlights an intriguing possibility: the ability to establish a national Bitcoin reserve. While XRP and Bitcoin are distinct, the economic efficiencies gained through XRP could theoretically free up capital that could be strategically allocated to bolster the nation's digital asset reserves. This comprehensive economic analysis underscores XRP's potential to not just optimize payments, but to fundamentally strengthen the U.S. financial infrastructure. Navigating the regulatory maze, SEC, DOJ, and Federal Reserve. The biggest hurdle for XRP in the U.S. has been regulatory uncertainty, primarily stemming from the SEC's lawsuit against Ripple. However, the proposal we're examining offers a clear pathway to legal clarity, involving not just the SEC, but also the Department of Justice and the Federal Reserve. First, regarding the SEC, the recommendation is straightforward. Classify XRP as a payment network, not a security. This would involve an official clarification and settlement with Ripple, finally putting an end to the protracted legal battle that has cast a shadow over XRP's operations in the U.S. Such a classification would align with Judge Torres' ruling that programmatic sales of XRP do not constitute an investment contract. Next, the Department of Justice, or DOJ, plays a crucial role. The proposal suggests removing DOJ restrictions for banks, providing legal clearance for XRP-based transactions. This would enable traditional financial institutions to confidently engage with XRP without fear of legal repercussions, thereby fostering wider adoption and integration into the existing banking system. Finally, the Federal Reserve and the Office of the Comptroller of the Currency, or OCC, are urged to mandate XRP for bank liquidity solutions. This would mean direct integration of XRP into U.S. financial policy, recognizing its efficiency in facilitating real-time, low-cost liquidity for cross-border payments. Imagine a world where banks can use XRP to instantly settle international transactions, bypassing the slower and more expensive traditional correspondent banking system. These recommendations highlight a coordinated effort across different government agencies to establish a clear and consistent regulatory framework for XRP. It's a recognition that without such clarity, the U.S. risks falling behind in the global digital asset race, missing out on the economic benefits that XRP could bring. Legislative efforts, bills in Congress. While regulatory agencies grapple with existing frameworks, the U.S. Congress has also been actively engaging with digital assets, introducing several key bills that could significantly impact XRP. These legislative efforts aim to provide the much-needed clarity and a forward-looking approach to cryptocurrency regulation. One such bill is H.R. 9063. This proposed legislation aims to provide comprehensive regulatory clarity for digital assets. Its purpose is to define what constitutes a digital asset, how it should be treated, and, crucially for XRP, it could potentially classify XRP as a currency rather than a security. The impact of such a classification would be monumental, effectively legalizing XRP for broader use and investment across the U.S. financial landscape, and potentially leading to a significant increase in its value and adoption. Another bill making waves is H.R. 7070, which specifically aims to officially classify XRP as a currency. This bill, if passed, would be a game changer, removing XRP from the purview of securities regulations and fostering even wider adoption. This legislative move would directly address the core of the SEC's lawsuit against Ripple, providing a definitive legal status for XRP from the highest legislative body. Perhaps the most comprehensive piece of legislation is the FIT21 Act, or the Financial Innovation and Technology for the 21st Century Act. This act is designed to establish a clear and robust regulatory framework for digital assets in the U.S. It aims to delineate the responsibilities of the SEC and the Commodity Futures Trading Commission, like CFTC, ensuring that digital assets are regulated appropriately based on their function. For XRP, the FIT21 Act could provide the overarching clarity needed to operate without constant legal ambiguity, paving the way for greater institutional participation and innovation. These legislative efforts demonstrate a growing understanding within Congress of the importance of digital assets and the need for a tailored regulatory approach. The passage of any of these bills would not only benefit XRP, but also provide a much-needed boost to the entire U.S. crypto industry, ensuring that the nation remains competitive in the global digital economy. Executive branch and public support. The push for XRP's integration and regulatory clarity isn't confined to Congress and regulatory agencies. It extends to the executive branch and has garnered significant public support. Ripple CEO Brad Garlinghouse has expressed optimism that XRP will be added to the White House digital asset stockpile, a move that would signal a strong endorsement from the highest levels of government. This would not only legitimize XRP further, but also potentially open doors for its use in various government functions. Furthermore, there's a strong case being made for the Treasury Department to utilize XRP for critical government payments, such as IRS and Social Security disbursements. The proposal suggests that implementing XRP for these payments could lead to significant cost reductions, streamlining operations, and saving taxpayer money. This highlights XRP's potential as a practical solution for improving government efficiency. On the political front, figures like Congressman Tom Emmer have been vocal supporters of clear crypto regulation. Emmer, a prominent voice in the blockchain space, has actively weighed in on the Ripple case, advocating for legislative solutions that would provide certainty for digital assets. His involvement underscores the growing bipartisan recognition of the need for a well-defined regulatory framework. Finally, the collective power of XRP holders cannot be overstated. This large and passionate global community has been actively lobbying for regulatory clarity and consistently supporting Ripple in its legal battles. Their sustained advocacy demonstrates a strong belief in XRP's potential